You're all very welcome to Practice News this 4th of June. Practice News is news for practitioners. It's all about you. It's for you. So as I say, you are very welcome to it. What will we be talking about today? I just call up our headlines there. It's a packed schedule. We're going to be talking about regulation. What do you need to know? We're going to be going into insolvency, audit, anti-money laundering particularly. We're going to be talking to our colleagues from professional standards about what they're seeing, what we need, what's new. We're also going to be talking to representatives of the Gardaí and the PSNI about what they are seeing in the world of fraud and money laundering, but once again, particularly money laundering. Looking at the world of tax and government supports, the Twiz Reconciliation deadline is coming up. Where do you stand? What's new? So we're going to be talking to Nora and also Jason Collins of Callsoft are going to be on talking to us about this. And we've also got a poll. We're going to ask you what you are doing about your employees or about your clients' employees' TWSS payments. Okay. We're also going to be talking about the new Scarp Bill. The heads of bill are out, so we're going to be talking about that. What does that mean for you? This is all about small companies. So I think this is going to be something that people need to be aware of. They're going to need to be aware of what's coming. It's early stages yet, heads of bill, but you need to be aware. Okay. Also, there's new guidance out on third-party assurance requests. Chartered accountants are constantly being asked to crystal ball gaze. What can this company survive so that we can give them funding? A funder may be asking. So what is our guidance on that? It's out there. And also, obviously, we got a deferral there. Great news. We got a deferral there until the 11th of June. That's next Friday now. It's coming fast upon us again for CRO filings, for key CRO filings. So what's the latest on that? We've just been talking to the CRO this morning, as late as this morning, just to hear what is the latest on that. So we'll have that for you. And also student education, a lot happening in student education, a lot you need to know about, a lot that has changed in the past year and has changed going forward. So what do smaller firms need to know now about student education? So as you can see, a lot there, a lot going on. Now, who's going to be the team bringing all that news to you this morning? Well, it's going to be ourselves, myself and Jeremy, first of all, from Practice Consulting, here to support you in practice, but also our regular guest, Nora Collender, is going to be on talking to you about all things tax. We'd like to have you, Nora, again. And we're also going to be joined by our colleagues, Aidan Lamb, the Director of Professional Standards, and also Anne Cullen, the Head of Audit Monitoring from Professional Standards. So they're going to be talking about, towards the end of the programme, so stay on for that, they're going to be talking about what they are seeing, what's new, what's out there in the world of regulation, and what they are seeing when they go out and monitor you. Right, so there you go. That's our team this morning. And we're also delighted to have special guests, Jason Collins, the founder and CEO of Callsoft, and also the chair, and let me just get this right now, the chair of the Payroll Software Development Association. It's an association that meets regularly with revenue on payroll and technical matters. So Jason is going to be talking to us about the TWSS reconciliation and what that means to you. Okay, now, where are we going with this now? And we've also got representatives from An Garda Síochána. Pat Lorden is going to be coming on to talk to us about AML and also an amount of cybercrime and fraud, those things also. And likewise, Craig Haddock from north of the border of the PSNI, similar issues there. What's happening with the PSNI? Right, so we're delighted to have those guests. Now, yourselves, who are you this morning? Once again, it's people from all over the island, largely FCAs, largely senior people, and largely members in practice, some people employed in practice, so largely principals in practice is who are pitching this to this morning. Now, looking at who from the Republic of Ireland, predominantly from the Republic of Ireland, but also in sort of more or less proportion to the membership, people from Northern Ireland. Age distribution there across the range of ages, across male and female, and of course, as you can see from the map, across the island of Ireland. Now, also, we will make the point, as always, that this, look, this is our disclaimer, it's practice news. We are hitting the topics very, very quickly, and we're just drawing your attention to it. Do follow the links. do bear in mind that whatever we say this morning is going to be a summary, and if you're actually advising clients are actually taking action or not taking action as a result of this, just to make sure what you're doing. Okay, and just make sure you go back and check the actual technical source as you would for anything. Now, there we go. That's our disclaimer. Practice updates. Look, just to alert you if you haven't got it already, Practice Matters has come out to you. By way of sent out by email now. So if you're not getting that email, do follow that up, because we're not sending out Practice Matters anymore in hard copy format. We're only sending it out by way of email. So you can email us a PDF. It's going to be very similar to the old Practice Matters that you would have got in the post or with Accountancy Ireland. But this is the way we're getting it now, so we can get it to you more promptly, to be quite honest. That's what it's all about. So there you go. That's that. The main article is about ethics, what you need to be thinking about, especially the ethics and governance of charities and not-for-profits. An article, a very interesting article there by Neil Fitzgerald, the head of ethics and governance. So Jeremy's going to talk to you a little bit more about that in a few minutes. All right. But now let us talk a little bit about the Scarp Bill, which has come out. And just bear with me 1 second. There's a few points I want to make to you about this very, very quickly. As you can see, we're moving very, very quickly through this. I think Jeremy gave me about 5 minutes to make all my points, so I better make them quickly. There's heads of this bill have come out, right? So I suppose the main point is this is for small companies only, as they will be, largely speaking, as they will be defined in the Companies Act. And the point is that this describes, probably not quite accurately, but as examinership light, in order to keep small companies afloat. That is the point of the legislation, at a fraction of the cost. And the reason why it's likely to be at a fraction of the cost of an examinership is there is only one professional involved, called the process advisor. This is a new role that you become familiar with. Okay, now the process advisor is the person who makes the assessment as to whether the company is a viable company, and also the person who carries out the process. So you can imagine there's a fair amount of ethical stress on that person to make the independent call as to whether the company is viable, and then to actually carry out the process. So there's going to be pressure on that person, especially for smaller companies, where it is a much more personal matter for a small company whether it's going to survive or not. So, I would see this as an area where accountants, obviously you need to be an insolvency practitioner to do this, but equally it's going to be, we expect common enough for those sort of companies. It's an alternative to liquidation, obviously, for those small companies, and obviously an alternative to examinership. Revenue may exclude themselves from the process, but if you compare experience of the personal insolvency world, they tend not to for compliant taxpayers. So it could well be the case that this is how revenue will view this going forward. If all of your tax returns are up to date, in the past, as say in personal insurance, they have complied. So that would be the advice now, would be get the tax of those companies, the tax compliance, up to date. Okay, there are other steps also. Look, there's a webinar coming up on the 29th of June that if you're interested in this, I'd recommend that you attend that webinar. So that's what we have to say about that. Right, what else has happened? There's been a recent update, a new insolvency statement of practice, SIP 9B for Republic of Ireland. It's to match 9A, which was for Northern Ireland. A similar sort of idea. It takes a different approach to the SIP in that it covers general rules, first of all, for all payments to office holders, not just liquidators there, to all office holders, and then it deals with the specific types of rules for specific types of office holders after that: liquidators, receivers, examiners, and so forth. So if you're involved in insolvency, go to that, read it. That's all I'll say about that now. Now I'm going to hand you over to Jeremy, who's going to talk to you briefly, I think, about CRO filing, and we're just going to I'm just going to give you that latest message also once Jeremy does his piece there.
Indeed, thank you very much, Conal. Yeah, just giving you the latest instalment really of our interactions with the CRO. As everyone knows, hopefully knows, the Institute has been in continuous interaction with the CRO since the beginning of the pandemic, over 15 months ago now, and particularly our professional accountancy leader, Dee Moran. And the key thing here is really to outline our member concerns, particularly at the onset of the crisis, really getting extensions on CRO filing deadlines. But early 2021 has been particularly challenging for CRO and for filing. We've had the level 5 health restrictions, restricting agents and accountants and the work you can do and working from home and from your office. And also then, of course, we've had the new updated core portal, which, let's just say, it's had its issues. And just recently, and it really is, I suppose, it's been brought home, is the worth of our interactions with the CRO. Last week, of course, we all had the actual problems encountered by the new core port system when there was the, I suppose, late amount of filings actually coming from Monday, Tuesday onwards, and the system seemed to encounter capacity issues. We would have been informed both from members contacting ourselves in Practice Consulting and D, and also from our members in Practice Committee, what the issues are. And from the Tuesday, D would have been in constant contact with the registrar companies, giving her updates on what issues we're seeing and basically looking for an extension because the system was really struggling. That resulted, I think, on Thursday, it fed into the process for the CRO to actually give the actual extension of 2 weeks, which is very, very welcome, of course. Now, as we look ahead, of course, we are going to keep up this interaction with the actual register of companies, the system itself. And I know, Conal, you have some good news there you're going to give us this week of how it's working. It is making progress. You are working to increase capacity and so on as well, and also to make it more user-friendly. But if there are issues you're having, and if you're not getting any resolution from CRO, please still do relay us to the Institute, and we can actually relay them on members' behalf then to the CRO. Now, that's my thoughts on the CRO. Conal, I know you have a latest update just this morning from our interaction with the Register of Companies, yeah?
Yeah, absolutely. So what's happened is we've just been speaking to CRO this morning, and they are telling us that they are not encountering serious difficulties on the system at the moment, that people are managing to file when they need to file, and that but the one thing they would strongly encourage people is not to wait until June the 11th until the filing date to get the filings in as soon as possible. But the one thing they would say is that if you do, for whatever reason, have to leave it until the Friday, and if the system crashes, to take a screenshot of what you have and send that screenshot to them, and they will deal with that if you send them in that screenshot. So that's a solution that they are proposing if people find themselves in that situation. So there we go. That's where things are at the moment. Thank you.
Great. I presume all we can do is say that we will, of course, keep up the interactions next week as well. And if there are any issues, which we hope there aren't, as I say to you, we will be in touch with the CRO. So fingers crossed, all will work out well. Conal, if you can move on the slide, my next actual area to talk about here is a regular one as well that I've had in practice news, third-party assurance and guidance. And this is one I think that actually has even increased in frequency, perhaps during the crisis. I get contacted by accountants right across the island in recent months, where you're getting a request from your clients that they need to get a certain form or whatever signed. Usually can be with relation to getting a bank loan or continuing bank finance, or it also can be if they're actually part of a public sector tender. And usually this then is a form that comes to you with very little notice. It's a set format and you're asked to sign it off. I'm sure you're all familiar with this. Now, we've always had actually guidance in this area, but we've actually updated recently a new technical release, TR021, and you can download it at the link there. But our advice to everyone here is that if you do get this actual request, naturally, you're always here trying to assist your clients and so on as well. But you may not be in the position to actually sign off these forms. Typically, you won't. They're asking for things like to certify perhaps the client's ability to be able to pay a loan in the future. In other words, for you to use your crystal ball as to what could happen for the client in the future, or also maybe to say how have their finances been impacted by the crisis. But you mightn't have done an audit or review of the accounts for 12 months or more. So you can't do that either. So we always say to actually practitioners is to try to interact with the clients and also with this third party looking for things to say, look, we can give you perhaps a letter, whatever assurance we can give you, setting out what our role is as the accountant. And perhaps that will actually suffice if you interact with the third party for their purposes, for the tender, whatever it will be, and give what assurances you can. But obviously you can't do this and sign off this thing certifying something that you don't have knowledge about. Now, that works in our experience on a lot of occasions, but there are occasions, of course, where you have more time and where you will need to do more work. And that's what this technical release is all about. It's giving you the actual guidance on how to do an agreed upon procedure, with the actual clients, the third party, to scope this out, to have an engagement letter, and then to have an agreed report, reporting back on whatever the criteria you've agreed on at the start will be. So I would say to you all to actually download Technical Release TR21. It gives you a lot of good details there. It also gives you, I suppose, what language not to use in such a report or in any actual reporting you do to a third party on a client's behalf. Hopefully you'll find it useful. So definitely that's as much as I can say on that one. Cornel, if you can click ahead. And yeah, you already introduced it. We have obviously had the picture of the latest practice matters. Our lead article is by Neil Fitzgerald, our head of governance and ethics. And in this, Neil is going through, I suppose, the key considerations for accountants when you're providing services to the non-profit sector. Neil has done some analysis there, and I think this will be very accurate as well. You can see that maybe 2/3, 3/4 of accountants, as far as we can see, do provide accountancy or audits to actually non-profit charities right across the island. Now, of the 5 considerations that Neil, I've kind of picked 2 and said there's 2 very, very important, I think, that you should definitely bear in mind. And the first one is here in the Republic is the Charities Governance Code. Now, the Governance Code, this will be the first year where charities have to report on their compliance with this. For a lot of volunteers and people involved in charities, they'll need a bit of help from their accountant in this regard. There is, of course, things that they'll have to report compliance in the annual return to the charities regulator. If it's a comply or explain, so if they're not compliant with the code, they have to explain it. And also they have to note compliance in their trustees report or somewhere in their annual return. That's the first key one. And I think this crisis brings home even more the importance of transparency and having full financial statements that are filed with the CRO if they're a company, and actually available as well for actual donors or whoever it may be, stakeholders in the charity. So this, again, the last time I had figures on this for, I think it was for 2018, Binifax, who look at these things in the Republic of Ireland, had said about 1/5 of charities that qualified at the micro regime were using 105, which is really a no-no from the charities regulator. And even using 102.1a or filing a bridged account with the CRO, it gets away from the whole transparency remit and requirement, and I suppose the ability for a charity to build trust with its donors. So Neil has brought that point home again. So I would say to you, have a read of that article, a really, really good article. The next thing then is basically with relation to owner management companies. And Neil, in coordination with David Rules of the Housing Agency, has put out a guide, and this is for the Republic of Ireland, but would be applicable, I think, in many instances as well for Northern Ireland, of the 10 key governance issues for company directors of owner management companies. Again, most of you here, I'm sure, have 1 or 2 of these as clients. A great guide to download and to share with your clients. Very easy to read, very, very useful from the governance, the financial statements, a very simple guide to have. So please download it if you haven't already, and do share with your clients in this area. I'm sure they'll find it of great use. Now, I think, Conal, that is me all done on my bits of news, but you're going to share with us about the online, you're going to share with us what student education and what changes are happening and what's likely to happen over the next 6 months or so as well.
Absolutely. A lot happening in the world of student education. First of all, I mean, the good news, Cap 1 exam went off very smoothly there. Sorry, just get back to that one. I'm on 1 second, get back to where I was. Cap 1 went off very smoothly. I think it was something like 99% of students got on there with no problems, got on board onto the exam. So I mean, obviously we had the problem with the e-assessment that had to be cancelled. I mean, the bottom line is we've investigated that one thoroughly, and we've put in remedial actions to stop that from happening again. Looking forward to the academic year 21-22, it is going to be predominantly online. So exams and lectures and so forth are going to be online, and that's really the way we're going to the future. I mean, you can certainly expect exams to be online in the future. So that's very important for members in practice, especially outside the main population centres. It does, to a large extent, level the playing field. So if you, for example, were thinking in the past, well, you know, training chartered students isn't for me because it's just too difficult for them to get to lectures, to get to exams and so forth. Well, look, in the online world, that has changed. So I would ask people, especially outside the main population centres, to think about whether training chartered accountants is for you. I mean, in the world of skill shortages, it's a great way to get talent is to train. So I say people should possibly think about that. The student recruitment campaign for this year has been launched. So if you go in there, if you follow those links, you'll see some great resources there. And if you can point any prospective students in there to the resources that we have. So I mean, I think those are the key news items in the education world for you. There we go. So now we're going to move on to tax. And Nora, you have the floor, Nora.
Good morning, everybody. Thank you so much for tuning in. So I'm just going to start this morning with a roundup of what are the new VAT rules that are going to take effect on the 1st of July. So what these are essentially VAT rules for e-commerce transactions. And it's important to stress that these changes only apply to cross-border business to customer sales and not to cross-border business to business transactions. These new rules are modelled on the mini one-stop shop, which has been in place since 2015. And the objective is to reduce the administrative burden for businesses engaged in the supply of e-commerce services across the European Union. So let's just start with a brief outline of what is the one-stop shop for distance sales. So the existing distance sales threshold of 100,000, which is operated in jurisdictions like Germany, or 35,000, which is operated in Ireland, will be abolished from the 1st of July, and they'll be replaced with a union-wide 10,000 threshold. So the distance seller may have to register in each member state they sell into, where the 10,000 EU-wide threshold is exceeded. Or alternatively, the distance seller can avail of this one-stop shop, whereby they file returns and remit VAT to one tax authority, who then redistributes the VAT collected to the tax authorities in the jurisdiction of the various customers. And we also have a one-stop shop for electronic interfaces or multi-seller interfaces. So under the new rules, the multi-seller platforms like Amazon and Etsy and eBay, they will be deemed sellers for VAT purposes. Payments and declarations of VAT will be made by the electronic interface through a one-stop shop mechanism also. The new rules apply to imported goods with a maximum value of €150 and to sales by non-EU vendors to EU customers. Then we have the import one-stop shop. So the current VAT exemption for imported goods of a value of up to €22 will be abolished with effect from the 1st of July. From this date, all goods imported into the EU will be subject to VAT. The customs duty exemption for imported goods valued up to €150 will not change. The seller can avail of an import one-stop shop if the goods are valued under €150. So EU suppliers can register for the import one-stop shop directly in their own member state, or they can choose to appoint an intermediary. For non-EU suppliers, they must register through an EU established intermediary, unless they are established in a third country that has a mutual assistance agreement with the EU and the goods in question are supplied in that country. So Revenue issued a press release on Monday alerting online shoppers to the prospect of VAT on imports on the abolition of the €22 exemption. But further guidance is promised from Revenue in advance of the 1st of July, and that guidance will be aimed at advisors and businesses of the changes. So just as I noted, sellers will have to appoint an intermediary in certain circumstances to register for the import one-stop shop. It's important to be aware that intermediaries are jointly and severally liable for tax as per section 109A of the VAT Consolidation Act. This measure came in under Finance Act 2020, so it is a new measure. At TALC this week, Revenue said that the obligation to submit returns and make payments remains with the seller. However, the intermediaries should be doing their own due diligence and identifying potential issues. Revenue envisaged that section 109A would only be applied in extreme circumstances, and they will issue more guidance on the role of the intermediary. But I just want you to be aware of the risks of this role if you're being approached to take on this particular role for a seller. So if you have technical questions directly relating to the one-stop shop, which are not covered in the 2 tax and duty manuals on Revenue's website, please email us and we'll be happy to field the questions with Revenue. However, we are told that there are at least 5 tax and duty manuals being worked on at the moment, and they should be ready for issuing in the near future. So I just want to turn to some lobbying activity undertaken by Chartered Accountants Ireland under the auspices of the CCABI. So our recent lobbying focus was on seeking a facility, an extension to the facility for employers to pay employees and directors temporary wage subsidy scheme tax without BIK being imposed. This was originally due to be in place until June, and now it's been extended out to September. Now, in our dealings with Revenue, they've said that this facility is not being used widely to date. So I'd like to run a poll now to see what's your sense of the matter. A question is going to pop up on your screen there to the effect of, do the majority of employers you represent plan to pay their employees temporary wage subsidy scheme tax? So it's a yes or a no. So for our members in business, could you step into the shoes of the employer and let us know what are your plans? Will you be paying this tax? It's just be something interesting to share for among ourselves, and to also it'll also help with our representations on the matter there with Revenue. So I don't know, has the poll gone through there, Chris?
The poll's gone through, Nora, and I can see people polling here. Okay. 178 out of our 320 on the line at the moment. Half 180 now polled, so we'll just leave it, and people are still polling away there. So we'll give it another couple of minutes to finish up.
Now, I do know what the challenge here is, that there's still difficulty for the employer in trying to work out what is the actual tax element of the employee's TWSS liability, because if you look at the preliminary end of year statement, that is the employee's full tax position for 2020. So that might include the allocation of credits between spouses. It might include other tax liabilities that the employee has from self-assessed sources. So it is very difficult for the employer to try and gauge what is the level of tax associated with the TWSS. And of course, it's also open to friction in the workplace. If one employee is paid X amount and another employee is paid another amount, and people talk and there's questions, well, why am I being paid this and my colleague is paying the other? Now, we have asked Revenue for some kind of a steer and a guidance of what is acceptable, and they're not going to provide this. We did ask them again at Main Talc, and it was part of our original lobbying representation that we made to them, but as far as they're concerned, they've provided the facility to not apply BIK, and it's up then to the employer to work out and to make the arrangement of how much of the employee's TWSS that they will pay on their behalf. So do we have the results of the poll there, Conan?
We do indeed. I'm going to try and share this now.
Okay.
I think I seem to have the pen here. So is that being shared now with all participants?
Yeah, I saw it there. So we have, yes, 42% of the majority of employers you represent plan to pay their employees TWSS tax by the end of September, and no, 58% do not intend to pay it. So look, that is still a significant amount of employers who have that facility. There is, of course, no obligation on the employer to pay the tax. That's very clear. It is the employee's tax liability, fair and square, and we've worked hard to ensure that message is put out there, and we've asked Revenue to ensure that that's clear in all its communication. But if the employer should so wish to do so, it is a good opportunity that they have this facility in place. And we, of course, we understand from speaking to our members that there's always the issue of cash flow, and the country is just coming out of a lockdown, so it's very hard for an employer to commit to this extra liability. But indeed, if they do wish to do so, at least they have the facility, and that's a very interesting outcome. And I hope that helps yourselves in your discussions and your considerations with your client of what other employers are thinking of doing. So just moving on to some of our other representation issues, another big one that we're working on is the debt warehousing scheme. For businesses that are in the debt warehousing scheme, the directors of those companies will not have a PAYE credit available to them in their tax return when they go to file in October this year. So that will have implications then for their income tax liability. We have put this to revenue in terms of, could there be a concession for a specific piece of legislation that underlines this particular treatment? And revenue's answer is no, they're not willing to provide a concession. As far as they're concerned, they have to operate the legislation as it is stated. We have highlighted that there's potential issues here because the director can, of course, avail themselves of a debt warehousing scheme, but potentially then you have a company will be servicing a tax debt and you'll have a director servicing a tax debt. And then there's all sorts of practical issues. What if the company pays off the PAYE liability in the debt warehousing scheme, and how does that translate to the director then, who's also in the debt warehousing scheme, for his or her PAYE liability? So I just want to say to you, it's not the end of the matter. We will be putting it in our pre-budget submission, and we're also working on the Institute's policy paper the next financial year, and we'll be bringing this up to government at every opportunity, just to highlight that, you know, directors essentially represent the small, medium-sized enterprises, and you know, this kind of a treatment for a very, very helpful tax relief is just very, very difficult for the SME sector, and we'll be continue to looking for some kind of a relief in that respect. So I just want to really give you a very brief outline of the government's economic recovery plan worth 4 billion, which was announced on Tuesday. There's lots of good enhancements to the tax measures that are in place to support businesses throughout the COVID-19 pandemic. So firstly, we have the extension of the employment wage subsidy scheme to the 31st of December 2021. So that scheme was originally due to run out in June. So it's really helpful that it's going to be extended for another 6 months. We do know that for Q3, there's going to be no fundamental change to support. We did do media work around this, asking for the support to be extended in its current format, because at the end of the day, all of these support schemes are highly complex, and it takes a lot of time for the business and their accountant to work out the rules, and the ramifications when you get it wrong are serious. So it's very, very helpful that they've decided to continue on the support scheme in the current format. So it is going to continue on at the enhanced rates, and the business's turnover will be compared for 2021 against its turnover for the full year of 2019. So that also will be helpful. That will not be breaking it down into a period of the year where it doesn't reflect the full economic impact of COVID-19 on 2021. So the Department of Finance have indicated that in Q4, the employer may be expected to make a contribution towards the subsidy, and that they will have to reassess the scheme, but it is going to extend in some format till the 31st of December. And at least for Q3, there will be no fundamental changes to support. So we also know that the COVID restriction support scheme has been extended and enhanced. So now there is an enhanced double rate payment for a 3-week period up to a maximum of 30,000 available to businesses which open from the 1st of June, and claims can be made from today. So once a business makes a claim for the enhanced restart payment, it no longer qualifies for the CRSS. So a business such as a pub and a restaurant who are permitted to open their doors from, let's say, the 7th of June, they'll need to consider when it will be most beneficial for them to make their claim for the enhanced restart scheme, or to stay on the CRSS while their turnover is less than 25% of the average weekly turnover for 2019. There was also the introduction of a new business support scheme for businesses with reduced turnover as a result of the public restrictions, and that's going to be implemented from September 2021. There's the extension of the debt warehousing scheme to allow periods where liabilities can be warehoused, and that's going to be extended to the end of 2021. And we also have the push out of period 3, whereby the 3% interest will start to apply on warehouse debt, and that's going to be extended till January 2023. So this should help businesses who otherwise would have been facing into servicing the tax debt at 3% from September 2022. We've been on to revenue already. and they are working on the new guidelines for the CRSS, the BRSS, the EWSS, and the debt warehousing scheme. And indeed, the press release was issued by Revenue on the enhanced CRSS yesterday. So I'm just going to hand you over there to Jeremy, who's going to take you through a review of our work for Northern Ireland.
Indeed. Thank you very much, Nora, for that very, very comprehensive analysis of what's happening in the Republic of Ireland. I know there's a few questions there actually coming in as well for you there. So hopefully you get a chance to take a look at them, and we will be replying back to questions both online and, of course, verbally here as we go through the show. Yeah, look, I'm just going to give you a couple of minutes for our callers here from Northern Ireland, UK, and also for our callers from Republic with UK clients. Of course, we always have very comprehensive updates as well in the UK tax and its government support area. Our Institute Tax newsletter each Monday. If you're not signed up for it, please do. You can get a link there to the recent newsletters. And also, of course, on our COVID-19 hub. Now, from last Monday's newsletter, just a couple of things to bring your attention. Of course, one of the things we were looking at was the SICE grant, which was actually, I think, grant 4 would have been 1 June was the close deadline. And there will be a grant 5 as well for the summer period. And hopefully that'll be it. But one thing as well was actually a consultation from government that's been ongoing for a while on the tax advisors consultation, particularly around registering of tax advisors, indemnity insurance, and so on as well. You can have your say on that by the 7th of June. Just go to that link there if you feel particularly about that topic and want to highlight it to Leontia, our lead on this, and it will be built into the actual response to the government on it. Now, for tax updates for the UK, we had a very recent webinar just on the 18th of May. Nora, you're involved, and also Leontia, and also as well, we had speakers from business and practice looking at the impacts of the 2021 budget 2 to 3 months on, getting back to business and reopening. I know we had to turn in O'Neill on from the Gael Gorham Resort, and also looking at, I suppose, basically how to emerge from the crisis and issues that are there and need to be tackled. You can get that webinar recording if you didn't get a chance to attend. It's about an hour and a quarter at that link there. And of course, if you do have any questions with relation to tax, please do contact Leontia. That's our email address. And that's as much as I can say on tax. I'm going to hand you back, Nora, to yourself and Jason. I think you're all set up slide-wise and everything else now and good to go.
Yeah, thanks, Jeremy. So the first of the pandemic supports put in place was, of course, the TWSS. And that scheme ended last September, but the compliance requirements associated with it have been really onerous for all involved, with the compliance check and the unusual direct tax arrangements on the employees, and of course, the reconciliation process. So our guest speaker today, Jason Collins of Colsoft Payroll Provider, will talk us through the do's and don'ts of the reconciliation process to properly conclude the TWSS. So I'll hand you over now to Jason.
Thank you, Nora, and thanks everybody for having me here today. Hopefully you can hear me and my slides are on screen. Well, I suppose, as Nora mentioned, Twiz is still ongoing, and it's the gift that keeps on giving. A scheme which finished up at the end of last August, and we're still up to our ears in work with it. I'm sure you're seeing a lot of activity amongst your clients with Twiz and trying to help them out and understand their reconciliation at this stage. So I'm going to just give a quick update on where we are in terms of progress. So overall, there was 66,500 employers who received a payment under the Twiz scheme, the temporary wage subsidy scheme from Revenue. And each of those employers has to complete their reconciliation with Revenue, and they have until the 30th of June to accept their final reconciliation. Quick reason why do we need to do a reconciliation? Well, the main reason is that for the first 6 weeks of the scheme, Revenue were always paying employers a flat value of €410 for each week for each employee, and there was different amounts for monthly and other pay frequencies. But in essence, Revenue were deliberately overpaying employers the subsidy, and the main body of work with this is to reconcile that against what the employer actually paid the employee, and any excess is returned to Revenue. Now, when we moved past the 4th of May last year, we moved into what was called the operational phase, and at that stage, Revenue were doing a calculation of the Twiz that you were entitled to as you were reporting it through your payroll submissions. So there still is some issues there. And there were some technical problems with Twiz along the way, where if employees were ceased as part of it, they didn't receive a Twiz payment. And then there were the situations with employees who were excluded from the scheme because they were maybe on maternity leave, or apprentices who were away on their SOLAS training at the time. So they didn't have a January, February period of returns, which meant they didn't have a Twiz entitlement. So there's some things like that that have to be sorted out with this reconciliation. Thankfully, eWiz is a much more straightforward thing, and there will not be a reconciliation required at the end of this. So this is Twiz, and hopefully by the 30th of June, we'll reach the end of it and we can finally say bye-bye to it. So the reconciliation started on the 22nd of March this year, and the opening position that Revenue had was that 41% of the employers who participated in Twiz were considered to be balanced. And what balanced meant was that the overall liability for the employer to pay back to Revenue was less than €500, and that all payments, all J9 pay slips and all payments to employees had been fully reported to Revenue. So there's two key aspects. You have to have reported everything, and your liability is less than €500. If your liability is less than €500, you don't actually have to repay anything back to Revenue, but you still do have to accept your reconciliation. Then there was a further 3% of employers who were actually owed money by Revenue as a result of the reconciliation. So 44% of people actually have nothing to do other than just accept the reconciliation, although we do still recommend it's checked, and I'll get into that in a little bit. So the progress to date, so these figures are from last Friday, and as of last Friday, there were 34,195 employers who had accepted the reconciliation at that stage. Of the remaining 32,000 employers, there are a mix of people who are balanced and people who are not balanced. And the people, there's roughly 19,000 employers who still have a balance of more than €500 and therefore have some amount of work to do before they accept the reconciliation. And I suppose the key point to remember is that this has to be done by the 30th of June. So from today, we really have 3.5 weeks to get through that remaining 19,000. So what's going to happen then on the 1st of July? So there's a couple of things. If an employer does nothing and doesn't accept the reconciliation, then Revenue are basically going to deem their reconciliation as final. And so the employer won't be able to make changes after that. Any situations where amounts of Twiz has not been reported, Revenue will recoup the full amount of the subsidy that was paid. So it's very, very important that people actually check their account before they get to the 1st of July. What Revenue are telling us is once the 1st of July comes, they're going to close this down very quickly. They're going to generate the statement of account, and the normal process will start after that in terms of capturing payment and the follow on after that. So it's very important that people do actually engage with this before the deadline. There will of course be some people who have queries opened with Revenue and they may not be finally able to accept them. In those cases, Revenue will allow a little bit of leeway, but again, it's important to not leave everything to the last minute and do it as soon as you can. Now, I did say at the start that people who are considered balanced can literally log into Revenue and accept their liability or their reconciliation, but I would urge some caution. We have the reconciliation itself is mainly focused on the relationship between Revenue and the employer, but of course there's the employee has to be taken into consideration here, and it's important to remember that any payments that an employer reports to Revenue become taxable income on the employee's end of year tax returns. And we have definitely seen cases where people would be considered balanced on the Revenue side, but yet what has been reported as being paid to the employee is actually incorrect. So an example we would have seen of that would have been a situation where an employer had made a mistake, and there was some employees that they didn't put in on the scheme originally. They noticed their mistake at some point. They went back and corrected their payroll to say that Twiz was paid to the employees, hoping that they would be retrospectively paid the Twiz. Revenue disregarded those, didn't pay it. So the employer account still shows a zero balance, but the employees were still left in a situation whereby it looked like they had received Twiz payments when in actual fact they didn't. So it is important that employers, even if you are balanced, check that what has been reported is actually correct. And that's pretty much the update I would have for the minute.
Jason, can I just come in
Yes.
there? So when we're talking about TWSS repayments,
Yes.
you have the start of the TWSS scheme where there was a flat rate paid, and then
Yes.
revenue worked out based on the
ARNW
thingamajig,
yeah.
right? So the proper rate was allocated. So you have you're going to have a repayment of TWSS stemming from that
Yes.
part of the scheme. But revenue are also saying there's probably about 5,000 employers who have gaps in the information. And if you have a gap in the information, revenue is going to say that you weren't due the subsidy and also look for that back. So
Yes.
is that really, like, I think a lot of accountants here would have been working with their clients, and they're fully up to speed on the first part of the scheme or the flat rate, but there is the danger as well of the gaps that as well can
Yes.
generate what revenue would see as a refund.
Absolutely. I suppose in terms of the gaps, what I would think we're talking about there are what we would call unreported active pay slips. And really what the general rule of thumb would be this: if you log into Ross and you go into the Twiz reconciliation section, if you can't see the accept reconciliation button, it's likely because you have some of these gaps. So without getting into the nitty-gritty of the CSV files and the detail, that's a very simple test you can check to see has everything been reported. Because if you haven't reported all payments and you have these gaps, revenue will not let you accept the reconciliation, and as you pointed out, they will recoup the full amount of the subsidy that was paid at the time. And it doesn't matter if it was in the temporary phase or the operational phase, because again, there was no requirement for the employer to actually report the Twiz that was being paid as they were paying it. So some payroll software reported it, some payroll software didn't, and that's why there might be gaps in the reporting.
Okay, and another issue then is that you just highlighted there that, you know, if an employer's got a balanced reconciliation and they think
Yes.
it's happy days, we don't have any more to look at here, you could have the potential problem of an employee who hasn't got the correct TWSS allocated because the records with revenue and the employer are both wrong.
Yes.
That's essentially it. I asked revenue about this and what's going to happen, let's say, because the employee is going to cop on in January 2022 when their credits and rate bands start being reduced. So the first person they're going to go to is the employer going, why am I getting a reduction in my credits and rate bands? What happened? Revenue say, look, that's part of normal payroll. You can go back and reopen the file and adjust it. What kind of a mess though is that going to?
It's going to be very messy. I mean, to be honest, what we're seeing working our way through these reconciliations, that a lot of these problems actually are because there has been a filing mistake. So we're seeing, going back to when temporary wage subsidy scheme started, there was a lot of people, let's say business owners, who had to take on the payroll themselves because the person who normally comes into the payroll couldn't because of the restrictions, etc. So they weren't used to doing it, and they made a lot of mistakes. We're seeing a lot of situations where a lot of people are trying to sort of fix their returns, but they actually make it worse. And one of the biggest problems we have in the payroll software industry is that, if the return was made originally through the payroll software, that's fine, we can control it. Once somebody comes in, let's say on a revenue raw screen, and manually adjusts something outside of the payroll system, we lose the link between what's on revenue and what's in the software. And because of the way modernization works, we can't actually read that back, and it can lead to all kinds of problems, Nora, in those cases.
Well, look, I'll finish up because I know we've to give everybody else a chance, but I just want to mention that if the employer is already in the debt warehousing scheme for PAYE purposes, then they're automatically going to have their TWSS repayment warehoused. The TWSS has been added or is about to be added, and I'm sure it's just activated really because the liability is going to be falling due from the 1st of July. I have had a member on who was saying that he was interfacing with my inquiries and the caseworker didn't seem to be aware of it, but it is an automatic facility. And then employers who are dealt with in the med and large cases division, they can go and make their case, and they will have the same opportunities that they would have had to warehouse their PAYE and VAT. So thanks a million, Jason. I really appreciate that. And there's a couple of questions here that we can get to, and
Absolutely.
I'm going to hand us back there now to Jeremy.
You're going to hand me that. And Nora, Jason, thank you very, very much. That was a very comprehensive update. And you're right, TWSS, it's the present that keeps on giving, I have to say. But hopefully by the end of June, we'll be through the worst of it. Listen, on to another topic that keeps on giving, and it's a topic that I'm sure frequent viewers here on Practice News will be aware we've covered in detail, even just last month with a change in legislation. The 5th directive coming in for the Republic of Ireland is anti-money laundering and fraud. And I'm delighted here today to be joined by representatives from both An Garda Síochána, Patrick Lorden, and also from the PSNI, Craig Haddock. And Patrick and Craig would work in depth in these areas of economic crime and anti-money laundering. So it's great to have you on board, really, I suppose. And my first question, and I'll start with you, Patrick, and then Craig, is, I suppose, what are you seeing with relation to money laundering, fraud, crime? What are the issues in the Republic, and Craig as well for you then in Northern Ireland as well and in the UK? So Patrick, hopefully you can hear us and hopefully we can hear you.
Good morning, Germany. I hope you can hear me, and I'm glad I'm not there in person because I've got a terrible head cold. It's not COVID. I've got that part checked out, okay? But it won't come down these lines. Delighted to have so many participants on this morning, Germany. I counted earlier, there was 330 or 40 people on.
Busy show indeed.
Yes, and I did get a text message from somebody online of a picture of myself, and you're very generous with my photograph that you used. I've aged a little bit, Germany, since that. But all jokes aside, we're in an era where none of us are secure from the fraudster. And I'll start off with very basic stuff. And I was listening for the last 15 minutes what you're paying to revenue. At least the money you're paying to revenue, somebody owes it to revenue. We have seen companies let money come out of their bank account, 10,000, 100,000, €1 million, it doesn't matter how much it is. We've seen all of the above in the last 12 months. And that's not to revenue, it's to a criminal organization, either based here in Ireland or further afield. And what we're seeing a lot of at the moment is still the traditional business email compromise. You owe somebody money, you owe somebody for, the latest one is property sales. I mentioned this to you the other day. We've seen a couple lose over €500,000 in a property sale. They reacted to an email they got from their solicitor and transferred the money. And we've seen a lot of that. You could see that in your own practice, obviously, big or small, that you owe an invoice or you owe a payment to anybody. So you need to make sure that where anybody is changing bank details, you need to check with them that they are the person you're talking to and not a criminal organization. But more importantly, they're focusing on a one-off transaction. And this would be where you're just doing a one-off transaction. You get an email in from a company, you take it as given. I've never dealt with this company before, but they must be legitimate. We're seeing a lot of that. We're also seeing a lot of messages coming in through WhatsApp. So your chief financial officer rings you or your CEO rings you and or sends you a WhatsApp, and you react to the WhatsApp and they follow up with an email. We've seen a company in the Midlands lose €500,000 last year on that. You obviously know about the phishing and all the links. Don't click on the links, don't open them, don't share them. We're seeing a lot of internal frauds cropping up that weren't there for many years, or maybe they weren't discovered for many years, is what I worry about. You've seen some of them in the media, very substantial amounts of money, but we're seeing a lot of internal frauds within companies at the moment. I put down a lot of it to people working from home, and while they're away, somebody else has had poke around the accounts or poke around their desk, and we're seeing a lot of that. Obviously, the big problem for us all is technology. And there's no doubt about it. Yesterday, it's not my area of expertise anymore. I used to cover it for 3 or 4 years. But yesterday, I became aware of 2 companies that are suffering serious ransomware attacks. Just yesterday morning, they started, and they're in serious difficulty. They cannot trade. So if I was to give another bit of advice, your backups that you thought were always brilliant, they're probably useless at the moment. So you really need to look at your system, how you're managing your backups and what you're doing with them, because the new technology is allowing the criminals to get into your backups. On a money laundering side, all of the above has to be laundered into somebody's bank account, into some other country, whether it's Ireland or elsewhere. And that's where you come into play as accountants. We are seeing more and more accountancy firms, big and small, being utilised to move money back to Ireland or out of Ireland, or into a company or out of a company. And that's where you need to be alert under the legislation and report it. I'll come back to the figures later on, Germany, but that's where I see your role in particular, to be our watching eye there in the business that you're in.
Thank you, Patrick. That was a very comprehensive update of everything you're seeing across the remit. And yeah, it's scary when you see these ransomware things, and also even just that example you gave with the solicitor and the couple and so on as well, and money going astray. Craig, Patrick probably has covered lots of things that you would see as well in Northern Ireland and the UK. But if there's anything particularly that you'd like to highlight from your experience as well, and anything new.
Yeah, good morning, folks, and thank you for inviting me. I just reiterate actually what Patrick says there. We're seeing the exact same problems, and we have been seeing them for probably 2 or 3 years now, around the technology and the advancement in technology with use of emails for mandate frauds and things like that. Importantly, if anybody does get an email like that in, generally the wording is not good spelling. There's mistakes made. They may have changed one letter or one number in the email trail, or the URL. So be careful of that if you're looking at emails asking you to pay folk or transfer money. I just come on to something that has a few things that have already been said actually in the morning meeting there. First thing around charities. We're seeing a lot of charities being set up in Northern Ireland to launder money. Plain and simple. And that's because there's a massive backlog within the registration checking in the Charities Commission here in Northern Ireland. So that's one to look out for around registering charities to launder money through. I think it was Nora mentioned the importation and the VAT on goods. We class that as carousel fraud. So the same goods keep going from north to south and just keep turning round and round. And there's potential there to keep reclaiming VAT that isn't actually paid in the first place. And the last thing around COVID grants, we probably in the UK have just saw the biggest fraud ever of possibly £30 billion of money being sent out by the UK government. These are businesses set up to claim either bounce back loans or COVID grants. So I suspect you will see the same thing happening in the Republic. With the COVID grants, where it was money put into accounts straight in, whether you needed it or not. And the bounce back loans were for £50,000 each. And companies were being set up with an address, business premises, which were all fictitious. So we're looking at potentially 30 billion for the UK government.
Wow, that is really, really, really massive, as I say to you, and of course so prevalent. Done with the right motives, as I say to you, to actually put out the loans very, very quickly, but checks not in place, and so on. A lot of good food for thought there, Craig. And I'm going to stay with you actually for my next question, and then back to Patrick. I suppose one of the things is that we've been constantly talking about here in the practice consulting side, and also with the institute, and I know Patrick as well was involved in a webinar previously, is suspicious activity reporting and suspicious transaction reporting for the Republic of Ireland, and particularly just even being registered on the respective systems, the NCA portal in Northern Ireland, or in Garda Síochána, GoAML, and the revenue systems in the south of Ireland. Craig and Patrick, I know you've been looking at some figures here of how many people are registered and how many reports you get in. I have some background figures before where just about 1% in each jurisdiction of the reports in this area just come from accountants, which seems quite low. Craig, you may have different thoughts on that now.
Yeah, well, firstly, I'll give you a couple of figures around the amount of SARs that were put in by accountancy firms in Northern Ireland. In the 1920 year, there were 16 SARs, and in 2021, there were 10 SARs, which is quite a small proportion of with the registration. I suppose I would look at that on three things. Firstly, most, if not all your clients will be compliant, but most of them will be lawful businesses. So potentially there's not an awful lot you're seeing. And I think an important, secondly, is that the firm isn't registered through the NCA. I think it's important going forward for your institute that there's something put in place potentially even to get your license to do business. Potentially you need to be registered with the NCA for anti-money laundering. And thirdly, there is in Northern Ireland always a fear of intimidation and worry around reporting suspicious activity. And I suppose it's just, I'll take this opportunity to say that anything reported will be anonymised. It goes through the NCA and it goes through a very strict compliance that we will never knock your door and ask you for a witness statement to say you've just reported on your own client. So I suppose that's the most important thing for me to say, that it will be treated in the strictest of confidence.
Yeah, that is very, very important. Of course, we all have potential concerns on these areas, and it's only human nature, but that is a very important point. And yeah, those figures, they strike me as being very, very low, as I say to you, for Northern Ireland. Patrick, I'm going to come back to you. You probably have been going through your analysis as well. Obviously, higher figures we hope for the Republic of Ireland of who's registered and how many SARs you're getting from accountants. But great to see that insight as well, if you have it to hand.
Yeah, Germany, we're slightly better, but I'll use the word slightly better.
Okay.
And as you know, Jeremy, we've done a lot of work over the last couple of years with the accountancy bodies in Ireland, and we've just established a public-private partnership with a number of bodies over the last couple of months. We haven't given it an official name as of yet, but we've had 2 meetings which have been very, very successful. And we've done this with the banks as well. We have a joint intelligence group with the banks. We also have one with the international banks that we've just set up in the last couple of months. But I think the accountancy one has more traction than I thought it would have. But going back to the figures, in 2019, from accountants, we had 17 reports. In 2020, we had 11. And in 2021, we have 15 already so far, which is quite good. Auditors, which would be slightly different, we had 21 in 2019. We had 25 in 2020. We've only had 3 so far this year. But that might be something to do with end of year when they do it. Registered, something, Jeremy, we spoke about. Auditors, we've got 30 registered. And in accountants, we've got 225 registered, which is quite small, really. And I know individuals might be saying, what's the point of me registering? But register, it's quite easy to do. And once you're registered, we may never need to see you send in an STR. I'm not hooked up on big numbers. Absolutely not. And I say this to the big banks as well as to yourselves. But to think that in 2020, we only got 11 STRs from all of the accountants in Ireland that should be reporting is quite dismal, to be honest with you. And I think, Jeremy, where we are going here in the medium term, I think, is the regulatory and regulation of this will be taken away from your own control. So I think what's going to happen in a lot of countries, I've been at every FAF meeting since 2015, and I think what you're going to see down the road is both solicitors, accountants, and anybody else like that, the control over your supervision will be taken away from you. And that will be quite difficult for a lot of you, and it will put a lot of pressure on a lot of you. So I would urge people to register and start engaging with us. As Craig said, it's not an onerous task to register, but nor is it an onerous task to report a suspicious transaction. I really find it very hard to believe in 2020, I know there was a COVID pandemic, that only 11 people saw reason to report a suspicious transaction. And most of our suspicious transactions never lead to anything. All it is a suspicious transaction. We hold it as intelligence, as does our colleagues in the NCA. And nothing will be done with a lot of them. And actually, if your suspicion is wrong or incorrect, once you stand over it, that's you covered. You don't have to worry about it anymore. We would say that hundreds and thousands of the ones we get, we never do anything with them. We look at them, we assess them, we analyze them, and they never go any further than the Financial Intelligence Office. So I would say to people on the call today, register, go on to FIU Ireland, onto GoAML. It's free. Amazingly, Jeremy, you get something for free, and I presume the NCA don't charge for it either, Craig. And it is helpful to you because we're sending out quite a lot of information on the GoAML notice board, and you will get that as well. And it's to protect your own business as well, because you'll see something there that might affect your own business and cost your business money, not to mind your client. So yeah, I think I agree with Craig on those points.
Well,
up the ante a little bit.
Thank you for those points. And actually, the next slide I have here, Conal, if you can move it on here, and it's one you've seen before. I won't dwell too much time in it, but I've just given you the links here for the respective actual systems to register on. We've forgotten a little bit about revenue here, but of course, you know, in the Republic of Ireland, you have a dual system. So if you see a suspicious transaction, you send it to GoAML and put it to GoAML, to An Garda Síochána, but also to revenue. And then, of course, one system for Northern Ireland, the SAR online system, the NCA. They're the links to register. Yeah, there's so much good guidance. There's different things there. Now, Patrick, I know you and your team were on with Professional Standards with Aidan and with Anne on a webinar just last December. Free webinar. You can actually go to it and you go through some more details there of how to register and how to use the system. It's a great webinar. And now, just to say one thing to you as well, we're actually going to have a dedicated webinar, myself and Conal, and other guest speakers as well to be decided with relation to how to report and what you need to report around suspicions, what exactly is to include in the SAR and so on as well. That's going to be on the 1st of July, so really looking forward to that one. Guys, I'm not sure, Conal, how we're looking timing-wise. I know, guys, you're going to stay with us actually hopefully until the end, until 11:30, so we may have some questions coming back. For now, I'm just going to say thank you very, very much for giving those insights. It's been great, really, to get it from people who are working day to day, have the oversight on the level of reporting, but particularly the issues that are coming up as well. And I'm sure we'll be working with you in the future as well through the different accountancy groups on getting the message out there. So it's been great to have you on board this morning. So thank you very, very much. The next thing I'm going to say is AML. We probably haven't heard the end of it even for today. We have our toolkit there, and that has been launched, just updated version, just actually in the last couple of weeks. Many of you, I'm sure, are users of this toolkit. It's now going subscription only. If you want to learn more about it or want to avail of the subscription offer, if you're an existing user of the 2019 toolkit, contact my colleague Bernie in Practice Members. Conal, I'm going to hand you back to yourself and Aidan and Anne. And I know, as I say to you, AML, I think it could be part of your conversation as well. Conal, over to you.
I think it will be. Thank you very much, Jeremy. And the one other thing that I will say is that we are at the point of launching an AML hub in the technical hub. So if you go onto the technical hub quite soon, I think in the next week or so, there's going to be a dedicated AML hub. I know there's an AML resource on the professional standards side also, but now there's going to be one in the technical side. So looking forward to seeing that. And that's free as well, of course. Now, I'm delighted to welcome my colleagues, Aidan Lamb, the Director of Professional Standards, and Anne Cullen, the Head of Audit Monitoring. So you're both very welcome, Aidan and Anne, to talk. It's the last item, but by no means the least important item. Professional standards and what's going on, what's new. So Aidan, if I might start with yourself, I think there's a lot going on in the world of regulation. So if are there some items you wanted to alert members in practice to?
Thanks, Conal, yeah, good morning, everybody. I hope you're all well. The graveyard shift again. Just picking up on some of the comments that Patrick and Craig have made. I mean, wholeheartedly endorse everything that they have said. And indeed, their appearance here this morning really is, follows on, I think, from recommendations that we have seen emerging from various national risk assessments that are carried out by the likes of FATF and the EU Commission on the importance of engagement and information sharing between law enforcement agencies and other stakeholders. And certainly we've seen a lot more of that in recent years. Today is a further example of it, and absolutely, it's of huge benefit to both of us. I would emphasize also what they have been saying about registration in terms of SARS Online and GoAML and the revenue equivalent. Absolutely critical, and certainly as far as we are concerned within professional standards, that is something we will be asking practitioners about when we do go to see them. Because it does demonstrate an awareness, demonstrates a willingness in terms of firms that they recognise that we as a profession, and indeed, it really is part and parcel of our public interest remit, have a role to play in combating financial crime and money laundering. Craig mentioned charities and what's going on there, and really, to me, that points to the importance of a firm's own risk assessment. The need for a firm to risk assess its client base to determine, the level of due diligence that is needed to perform on those clients, whether they are charities, whether they are clients that they operate from on a non-face-to-face basis. The nature of the industries. Why is a particular client coming to me? I've come across a couple of years ago a country practice in the Midlands who suddenly was approached by a number of clients from the Middle East. Why him? And it did result in a SAR being made, an STR being made by himself and indeed us. So be skeptical. It's the application of that skepticism to the client base that you have and to your new clients in particular. Just drilling down a little bit into what's going on in the professional standards area, maybe just picking up on the UK. First of all, certainly our practitioners operating in the north of Ireland will be hopefully familiar with UPBAS. UPBAS is the supervisor for the various professional bodies in the UK, 20 or so under its remit, and it's just completed its second round of reviews of the professional bodies such as ourselves, and just a couple of issues that it has picked up for us to finally complete our criminality checks, or in terms of principals within firms have all had to, within the last couple of years, submit to us criminality checks, for access NI checks, and we're 99% there at this stage in terms of every practitioner providing us with such checks. So thank you to the firms for helping us meet those requirements. Reviewing of SARS actually is something that we've been asked to do as well during firm reviews. Primarily from a quality control perspective, how good is the information that is being provided? How well are the reports being completed? So firms being reviewed in the future in both jurisdictions, certainly in the north, and I would say likely in the south of Ireland in due course, will see that SARS review or STR review taking place. And our own risk profiling, again, UPBAS encourages us to keep up to date, keep refreshing. That's why we ask you for some of the information we do in your firm annual returns. We have an obligation to risk assess our firms, and that in turn drives our visit selection. So those are three issues, if you like, that UPBAS have picked up and have asked us to just pay particular attention to. An area of focus, in both jurisdictions over the last period of time has been provision of trust and company services, TCSPs, trust and company service providers, and certainly there is an interest in law enforcement from law enforcement in that particular activity. So a lot of our firms do it on an incidental basis. We have about 50 exclusive TCSP firms in the Republic of Ireland on our books, and that is an activity that will receive particular focus from us in the coming year or so. And indeed, those TSP specific firms will have been issued recently with a questionnaire, which is really to allow us to refresh or keep up to date the information we have on those firms. In due course, our firms in the Republic of Ireland, as we have done with firms in the north, will see us contacting them, particularly firms with no audit registration or no IB authorization. So they're just simply providing accountancy services. They will hear from us in terms of us updating our information regarding principals in those firms, because quite a lot of firms would have non-member principals in them, and we don't necessarily have all of that information. We're now seeing with the fifth directive now being transposed in both jurisdictions, an obligation on us to make sure that we have accurate and up-to-date information on principals within the firms that we supervise. So we will see, you will see more of that happening in the future. And clearly, just to mention again, the firm risk assessment is a particular focus of our visits. When we go to see firms, we will expect to see that done. And finally, on AML, it is likely that we will see, particularly for larger firms, AML only reviews going into the future. Where we can in the past, we have combined AML supervision with visits to firms to look at audit or IB, et cetera, but we're finding now there is an expectation we drill down into much more detail within firms in terms of what is going on. I'd give you a further plug for your toolkit, Conal. That's something that certainly will go a long way towards helping firms meet their ongoing responsibilities. Changing the subject completely, if I just talk briefly about Brexit, it's now done. And you may have heard me say before that certainly firms registered for audit with the Institute in both jurisdictions, their auditing rights remain intact. However, we do recognise that regulatory regimes that are overseen by IASA and the FRC are diverging. And I'll talk a little bit more about that in a sec. So we are offering firms, if they wish to restrict their registration to a particular jurisdiction, and by so doing, they are only required to comply with one set of regulations. So you may have maybe a number of firms in the Republic of Ireland who have no UK clients, no UK audit clients, have no intention of ever taking on such clients. Do they need to continue to hold UK audit registration? And we've actually seen 80 firms since we started offering this at the beginning of the year opt to restrict their registration to a single jurisdiction. And coming the other direction from the north of Ireland, we've seen 12 firms opt out of Republic of Ireland jurisdiction. So, if people are thinking about that, they want to know more about it. I mean, it is simply advising us of your intention, and we will make the necessary changes. You may be aware also, as a result of Brexit and other things, I guess, that ICAW, which is currently a recognised body in the Republic of Ireland, has decided to de-recognise under Irish company law, and that will take effect from mid-July. Now, we have been in contact with firms actually only this week, advising anyone who has among their principals or responsible individuals ICAW members to get in touch with us, because once ICAW leaves, the eligibility of those individuals falls away. Now, we have agreed only this week a solution to that issue with IASA that will essentially involve those ICAW members taking out reciprocal membership with ourselves. And again, as I said, all audit compliance principals should have received by email yesterday a communication setting out what needs to be done. ICAW's derecognition will take effect from the middle of July, so it is important to move quickly in this. And in due course, I anticipate ICAS, the Institute of Chartered Accountants of Scotland, going in the same direction. I think there's a little bit more time to go on that, probably the end of the year. But if you have among your principals or partners, any ICAS members, again, read that letter that has gone out to all audit compliance principals yesterday. And just finally, you know, an example of how the regimes are diverging, and I think you've mentioned it previously, Conal, during these sessions, are IASA's CPD requirements, which were finalised earlier this year, and apply to those with who are on the Irish audit register, and individual RIs in particular. Now, I'm hoping and anticipating that what these require for you as responsible individuals is essentially what you're doing at the moment, because it very much accords with best practice and IES 8, so the International Education Standard, which deals with responsible individuals or statutory auditors maintaining their audit competence. The big changes for us as an audit supervisor, so we will have to have in place a regime that requires a much more proactive monitoring of CPD by responsible individuals on a 6-year cycle. And just to give you an idea of what that will entail for us, it'll, you know, an assessment of the quality of the auditor's CPD planning and evaluation, ensuring that that CPD is sufficient, relevant, and appropriate in terms of your audit client base, and making sure that it addresses you know, recent issues, and also requires us to, you know, in terms of bringing in or assessing those records on a sample basis, formally assessing what's there, writing to the RI with views or setting out that assessment, and indeed potentially applying a grading system. So, you know, we're seeing, as I've said previously, our audit regulators becoming increasingly intrusive and setting higher and higher expectations in terms of statutory audit. I mean, I would say I regard this particular issue as overkill. And indeed, certainly we as an institute did push back on IASA when these proposals were first mooted, but unfortunately didn't have too much success. They come into effect from the beginning of next year, and I would so, you know, over the next 6 months you will see us sort of kind of ramp up our activities in terms of visibility on these particular requirements, and hopefully coming out with you know, information, templates, etc., that will assist members on an individual basis to comply with these requirements. There is an ability as well to seek to place some reliance on the systems and processes that firms have in place. You know, so we will be looking, and particularly, I suppose that's relevant to larger firms, and we'll be, you know, working to see how we might apply that in practice. So I'm going to hand over to Anne now. So just before I do, I'd just like to thank, you know, all of you for bearing with us in professional standards throughout the last 18 months. I know sometimes dealing with us is a little bit frustrating, and certainly the way we have had to do things you know, has been changing, particularly in the conduct of visits, which now obviously are carried out on a remote basis. Anne is going to say a little bit more about that to you now, so I'll hand over to Anne. Thank you very much.
And thanks very much, Aidan, for that very comprehensive assessment. And it's taking the last point first there. It's not that people aren't getting good CPD, it's the quality of documentation of the CPD that they're getting is perhaps going to be the key, which I think, Anne, leads us to one of the key points that we need to discuss. So, Anne, your role is the head of audit monitoring, which kind of says what it is, I reckon. So
that's right, Conal, yeah.
so tell us a little bit about the role and possibly how it's changed with times of COVID, and perhaps what people can be expecting if they get that email.
Absolutely, yeah. Well, it is what it says on the tin, basically. I am head of audit monitoring, so I oversee, in the main, the audit monitoring business that we do, but I am involved with the inspection team in relation to all monitoring visits, so all areas. And we have had to adapt since COVID, and we've stopped going out on site. We don't expect that we will go back out on site this side of Christmas, really, to be honest, because we've got to take account of, we have to make sure everybody is vaccinated and all other issues in relation to that. So what we've done, really, we haven't changed enormously. What we've done is we've adapted. So if you are due an audit monitoring visit or any monitoring visit, what you can expect initially is to receive an email advising you that you're due for a visit, and you will then be asked for a follow-up phone call. And it is normally myself or a colleague that will make that phone call and explain to you how we are approaching the visits. And what we're doing, really, we got busy last year and we have set up a portal which is completely secure and confidential, and we are asking firms to upload information to that portal in advance of the visit. And the information that we're requesting is very similar to what would have been the pre-visit information for our on-site visits. So there's nothing enormously different in it. It's mainly what we call the whole firm information, so compliance reviews, CPD details, all that sort of information, and also a list of clients. So if it's an audit monitoring visit, you'll be asked for audit clients. If it's an anti-money laundering visit, you'll be asked for a full list of clients. Then we schedule an opening meeting, and we do that opening meeting by video conference where that is at all possible. But obviously, if people aren't set up for that, we can do it by the telephone. The inspector holds the opening meeting, which essentially replicates what would have been the first meeting on the very first morning of the visit when the inspector had arrived out if they were going on site. So what they want to talk to you about on that call is really any queries they have from the information that you've already submitted to us, but mainly they're looking to get an understanding of your practice, the profile of your clients, the type of work that you're doing. After that, they will decide upon files that they would like to look at and make arrangements then in terms of getting access to those files. Some firms are willing to scan files and they can be uploaded onto our portal, or in other cases, firms take a decision, maybe it's just easier just to get hard copy files delivered. We're open to both, whatever works. I suppose one thing that's very important to say in relation to this whole visit process is we are very conscious it's been a very difficult time for firms, both commercially and also personally. Some people have had very difficult situations to deal with. So we are very willing to work with people in whatever way we can in order to get the visit done. Obviously with audit, we do have a statutory obligation to go in once every 6 years, and we are somewhat constrained in relation to timings around that. But where we can work with you at all, we are willing to do that. And that's the purpose really of having the phone calls as opposed to just sending letters out to people. So one thing I would say is if you get that email from us, you know, please do communicate with us. Please do keep in touch with us and we will do our very best. We very much approach the visits in a constructive manner. We want to help firms. We want to add value to you, and we hope that you get something from these visits. And that is very much the mindset that we are going in with. We are absolutely not going in there to make people's lives difficult. So again, just to bear that in mind, that it is very much a value add that we are seeking with that. So then I suppose just to wrap up quickly, we select the files, we get the files delivered, and then the file review process works very similar as it would have done if we were out on site. The main difference being that we communicate via email and by video call, and we try and get the file reviews and the closing meeting all wrapped up within the same week where we can at all, so that the visit isn't dragging along. And we've been finding it's been working very well.
That's really interesting. And I mean, obviously having to react to the COVID situation, and I possibly, you know, the going forward situation will change as well. I mean, I presume it's just fluid at the moment.
Yeah, that's right, Conal. I mean, obviously it's so difficult to plan in these times, but we do anticipate going forward. We probably won't go out on site for every single visit. We may well decide some of them we can just do them remotely, and we will do them remotely. It might be more efficient. In other cases, we might go out, have a face-to-face meeting, take some work away, do some work off-site. And then again, in other cases, sometimes it's just easier to be on site. And in those cases, you know, it makes more sense and we'll just do that. So we anticipate we'll have a mix going forward. Yeah.
That's interesting for people to know and important for them to understand. We had a discussion before this, Anne, and we were discussing the issues that are coming up. And it does seem to be, to some extent, the usual suspect. Those things which were a problem in pre-COVID are still a problem.
That's
Is there
right.
anything you'd like to drill into particularly here, just in the very short time we have left? Any particular themes that?
I suppose very briefly, just to flag, I suppose what you might say, the obvious ones during COVID times, going concerns, subsequent events, fraud. Patrick mentioned when he was speaking, we would wholeheartedly agree in relation to that. And you know, not just to tick the checklist and tick the boxes on the checklist, take a step back, think about things, think about if you haven't been able to get into your client, you know, what impact is that having on your audit? If your client can't get direct access to their customers, what impact is that having? And even if you've looked at things like accounting systems and controls previously and concluded they were appropriate, are they still appropriate in the new in the new times? So it's I suppose standing back, taking a cold look at things in the current context and just having a good think about them. In terms of financial statements and the impact of COVID, we're seeing in some cases auditors saying to us, well, you know, COVID had no impact on this organization, so there was no need to mention anything in the financial statements. Well, sometimes maybe there should be a disclosure to that effect, you know, and even on the audit file for the auditors to explain their reasoning, document the work that they've done. In plenty of cases we're seeing, and we can tell from speaking to people that the work has been done, but if it hasn't been documented, we can't see evidence of it on the file. So if you're doing that work, give yourself the credit for it and document.
Absolutely. If it's not documented, you can't see it, and it's gone really. Yes, I guess, and the same applies to anti-money laundering. I guess also, I know Aidan and indeed Anne, we were all talking about the business review, the whole firm review, that it should be real. And the purpose of it should not be to say there are no anti-money laundering risks in my firm. The purpose of it should be to identify those areas of greater focus, even if the risks are being mitigated.
Even if the risks are being mitigated. And also, Conal, to make sure then that your anti-money laundering policies and procedures are appropriate to the risks that you've identified and are being applied appropriately, and that your staff are aware of those policies and procedures, and that everybody has been given appropriate training and all of that. And that should all come from that business risk assessment.
Absolutely.
And again, document the business risk assessment. We are seeing in some cases people telling us, yes, I've done it, but we can't see it.
Absolutely. I think, Anne, that we should invite you back. I think
I was afraid of saying that.
To be said here. I think we'll do this. I think we will at a future point to drill into some of these issues and to have a look at what you're actually seeing, what the big problems are, that the sort of the D reports, what you see there, but equally what the low-hanging fruit is, where you know, the easy things to get right. So we can certainly have a very productive discussion about that. Of course, yourself, Aidan, or any of our guests. I'm conscious that everyone had more to say, and we always try to pack so much into practice news that we always, to some extent, fail. At the end of the day, we don't say all that we'd like to say. And we've also got, I'm conscious there's a Q&A there. We haven't answered. I know Nora has been very busy answering questions. I don't know if you've had a chance to answer any. The one directed to ourselves, Jeremy. I don't think we have, so we might take
Conal, we actually have, we've answered one or two, and actually Patrick has been good enough as well. Some questions have come in, always a session that piques the interest on the money laundering side. And I know, Patrick, there's been a couple of questions, and same for you, Craig, addressed with relation to both jurisdictions. And I know you had a couple of points you wanted to make, and even tips at the end as well. So Patrick, if I could ask you back in, you've seen, I think, those questions, you replied that you'd like to try to answer them. Some of them quite complex. I know I'm putting you on the spot, but you won't thank me for it, but off you go.
Yeah, thank you very much, Jeremy. And look, I had texted Jeremy a few minutes ago to say I had 3 pieces of advice first for yourselves. Forget about your clients, but your own companies. 1, get an IBAN checker to check the IBAN where you're asked to send money. It's free on the internet. So why would one of your clients be asking to send money to Timbuktu or Hong Kong when they're living in West Cork? That's 1. 2, get an email checker. It's not that expensive. And it'll tell you whether the email is from patlorden@gmail.com or pat.lorden@gmail.com. That's 2. Number 3, have a look at PUP payments and changes in tax. We have a huge amount of accountants at the moment, in particular in Dublin, coming across incidents where Pat Lorden was working all year, but somebody was paying are getting paid as PUP payment. That's arising a lot. That needs to be reported to Revenue and Social Protection. But going back to the questions that were there, all of you on this call are likely to get phishing, smishing, all those types of emails. And most of you will say it'll never happen to me. But I can guarantee you, out of the 320 odd people on the call at the moment, 10 to 20 of you will lose money in the next 12 months in one of those. I can promise you that. Either in your private life or in your professional life, you will lose money. Second of all, probably 5 to 10 of you will come in some Monday morning and your system will be locked out and you can't get into it. Now, that's the bad news. The good news, I think, is when you come across some of the questions here, like a theft, report a theft as you would normally, either to your local Garda station through a Section 19 report under the Criminal Justice Act. It's a theft. It's not a money laundering. That's one of the questions. The second one, I'd ask Owen maybe to contact me offline about it, because I would be very surprised, Owen, if the Gardaí would pick up the phone. And I was there in 1995 when the unit started, in short pants, I might say, but I was there. It would never occur that we would go and say that Pat Lorden sent in an STR, we now want you to explain this money in an account. That would never happen. So I'd ask Owen to contact me privately on that. But most of all then, to do with Northern Ireland, if you're based in Northern Ireland, your obligations are to Northern Ireland or the NCA. And if the NCA are of the view that it's relevant to the FIU in Ireland, Southern Ireland, they will send it on to us. And we distribute an enormous amount of STRs all over Europe in that regard. And the UK is no different. So those would be my points, Jeremy. Crime reporting is very important that it's done. And to cover yourself, you can do that under Section 19. But suspicious transaction reporting comes in on the GoAML. So just to be clear, don't mix up the two. If it's a pure theft from your office, that's not money laundering. That's theft. Now, that's not an STR. The STR is where you believe one of your clients is laundering money through a company or through a system. And going back to what Anne said, you need to think outside of the box here. For example, we dealt with a company recently and they were concerned about something, but actually they went to Conal Kennedy and said, Conal, will you have a look at this? But actually Conal Kennedy was the guy that was committing the offence. So you need, sorry Conal, you're innocent on this one, okay?
Who knows?
But you just need, as Anne said, think outside of the box here. Is Pat Lorden squeaky clean? I know he's been with the company for 35 years. You know, is there a risk? And we've seen from CEOs of companies down in the last 2 years falling on their own sword because they were carrying out bad habits in 2020 or 2000, and they carried them through to 2021. And sometimes it can take that long to find something. So yeah, Anne had very good points there, and very interested in what you had to say about what can be done. And this is not rocket science. I don't want to frighten anybody. Just have a look at what you need to do. And most of you on the call will never send an STR to me. I know that you won't, because you're dealing with people you know and deal with on a regular basis. And the last thing in their mind is ever to launder money for anybody. So there are, as Craig said earlier, small numbers of you will come across these people, but it's important that you're all aware that they're out there. Because if they find you, they will use you and abuse your system. And I hate to say it, but look, we all read about Gardaí arrested in the media and different things like that. But we've engaged and arrested with solicitors and Gardaí over the last 12 months, as solicitors and accountants. And I'm afraid some solicitors and accountants did end up in custody. So that's not a nice place to be. It's not a threat, it's not a promise, but that's where it ends up, I'm afraid, if you don't do things right. It is a breach of the criminal law, not just on guidance or anything like that. So it is important that you get it right. But, you know, I think as Anne said, have your policies, don't read them. Don't just leave them on the cupboard or on the side of the table. Read them and make sure they're up to date. And then you're covered. And, you know, the other thing, I suppose, anti-bribery and corruption is coming into the fore as well. It's something to look at as well, to look at that, I suppose, from your own internal point of view in your own companies, because the onus on companies now and on directors is huge. So I'll finish with that, Jeremy. Hopefully it's helpful, and apologies for the hoarseness.
Oh no, you've been very, very helpful, and I can't leave you off the hook, Craig, either, without if you have any further thoughts to share. I know there was somebody there who was putting out the very nice comment that the NCA reporting system could be a little bit more user friendly. I don't imagine you have the ability yourself to change the UK system, but if you have anything to highlight to us, and I see you're on mute there, definitely do feel free to share any further thoughts that even from listening to Anne and listening to Aidan as well.
Yeah, well, just quickly on that, if you want to send me an email on that, I'll certainly contact the NCA around that, but I have no control over that at the moment.
Brilliant.
Just to finish off very quickly from what Patrick was saying, this isn't rocket science. It's about knowing your customer, doing your due diligence. It's about perfecting records, and it's about having robust policies and procedures in place. And please register with the NCA. Because, as Patrick said, there may be suspicious activity happening, and that will not involve your practice as such, but we may come looking at your practice as a result of that suspicious activity. And finally, there may be a small piece of the jigsaw that will fit into organised criminality that you think submitting a SAR, well, that's not important, or that's not going to be up to much. That might be the final piece in the jigsaw that we need to put a door up a hall, not to be too abrasive, but I think that's my parting shot.
Well, Craig, that definitely, as I say, is look, it's good advice. As I say, it's not for you as the accountant to do the investigation. That's what your job is, Patrick and Craig. Just to, if you have suspicions, make your reports. Yes, guys, look, it's been great. I know, as I say as well, what I'll say to anybody here, if you want to raise something particularly with Patrick or with Craig, contact us in Practice Consulting and Practice Members. We can share your email address, as I say, in on that way if there's something you particularly want to talk about. Conal, I'm going to hand back to you. I know we probably have had other feedback for Anne, for Aidan, and for Jason, and for Nora as well. Conal.
Indeed, we are well out of time.
Yeah.
We've had a fair few queries. The very first one that came in, I'll just say that somebody's asking about the due date for filing B1s, B73. I'm not sure if B73, but 56 days. It changed to that. And the one thing I will ask people to watch out for is that once you start the filing process, you start the clock running. Came across one person caught out by that. He thought he had 56 days from the ARD. He didn't get it from the date he filed. So he was caught out with that and was hit with a late filing fee. So just ask people to watch out for that. Guys, I don't think we have time for anything else. What Jeremy and myself might do is stay on for a couple of minutes after the end, just if there's one or two queries that we can deal with. But what I say to our panelists, thank you very, very much to everyone who's come on. Thank you very, very much. We're over time. We extended it by half an hour. We've gone over that even. But I think we've given hopefully people some great nuggets there. Everyone in our panel there. There was just news which was vital for practitioners to hear. So that's what we're here for. Keep coming back. We're going to be running this again soon, and that's
yes, indeed. We have some upcoming webinars as well. That's very, very true. On and the slides that you'll have there give some very good material on upcoming webinars we have on the AML reporting on the 1st of July. You mentioned one as well on the Scarp on the 29th of June with Jim Stafford. Very, very good webinar. And also as well, we've other ones running throughout the summer as well. I think our next practice news we've been for the 3rd of September. So we're going to take a little bit of a summer break. I'm sure everyone is due a break now, but we'll be back at that stage on a Friday again. And yeah, definitely, I think there's some of these topics here we'll constantly come back to. They keep evolving. There's different things. Just to say thank you to all the panelists as well, as you said, Conal, to reiterate that. And it's been great to have you on board. And also to our background team, be it in marketing, be it in CPD, to Linda, Chris, Emma, and everyone else for all your help in setting this up and doing everything. And that's my thoughts, as I say to you. Conal, if there is some specific questions there, we're happy to try to go through them as well.
Okay, well, I'll tell you what, we'll say goodbye to our panelists first of all, and
thank you very much.
And to them, thanks very much. We'll stay on for a couple more minutes ourselves. If you ask a question and you particularly want to hear the answer to it, we'll just stay on for another minute or two for that. So that's what we'll do now. Now, I think just to see what we're left with here in terms of questions.
So we have something here from Jur, who's wondering if we have a regulatory visit, will PSD accept a link to the selected electronic audit files as a way to review them? My understanding is, yeah, they will review electronic files as well as actual paper files. Yeah. So Jur, if you're due a visit, you will actually they'll work with you on that. So they have caught up with that technology, and I know we review files as well in Practice Consulting in a similar way. We both look electronic and paper files, so that's we're easy on both.
Well, they have the portal, so I think the portal is much more secure than what most people can manage. So you're probably better off using the portal if you can, as a preference. The 11th is the 11th of June filing date going to be extended? I really don't think so. I mean, obviously it depends on what happens in the next in the next week, but that they really were keen not to, because they've given, that would be a third extension, and I think they were keen not to do that. But I mean, that is their call. In the end of the day, I know we made strong representations the week before last. I know it was last week, and that was part of the reason that they extended, but I can't say much more. Technical release, we gave you a link to that. People asking where the technical release was for reported third parties. There's a link there in your notes. Just follow that. Somebody making the point about late filing. The audit requirement for late filing. Yes, we've made representations many times on that, and we continue to. It is very, very, very strongly supported by government, by the department, and so forth. So they believe it works. And we're pushing we're pushing a rock uphill trying to get that changed if it's been seen to work. Do we need to update our engagement letters? Look, you always need to update your engagement letter. That's a given, because if you reference legislation keeps changing, but you're better to have an engagement letter, particularly one which says what you will do and what you won't do. Okay, that's the first thing. What am I doing for you? What am I not doing for you? And then after that, if you're referencing legislation, it's best to get it up to date, obviously. But for recent AML updates, yes, we'll have to look at that ourselves. Have to have a look at refreshing the standard engagement letter that we have out there. But yes, do of your own bat, just keep the legislation up to date. Okay, okay, all right. Is the AML toolkit free? No, we charge for that. I mean, on the basis that it is a valuable product. A lot of work goes into it. A lot of resources go into it, and we're keeping it up to date. So we've put it on a subscription basis, which hopefully is value for money for you. Okay, all right. I don't know the ins and outs for TCSP providers off the top, but I would imagine they're very, very similar to others. To start with that, assume that the requirements are similar. It's obviously can be more onerous, because somebody comes to you with just, here's a task to do. Do I really have to follow down to see who this person is, who owns them, and so forth and so forth? I think you do, but that's me talking. I don't know if you have a particular insight, Jeremy.
I don't. I know it is going to become a more tricky now. Obviously, with you'll have the trust RBO and the different things as well. As I say to you, I think it's something we're probably going to cover in more detail, probably in our autumn CPD sessions as well, because it's a moving target. And so on. And you're right. Always identifying who the owner is, the beneficial owner, the different things, and who to collect the basically AML due diligence on is always a tricky exercise, but we will cover that more in a CPD session for sure.
Very good. Okay, and someone asked us a technical question there about accounting. I think somebody answered that one. Thank you, Jeremy, if that was your good self. I'd imagine you were best placed to answer it.
Yes, I didn't answer any questions here live on the 10, so it maybe perhaps was...
maybe Aidan did. Maybe Aidan did.
It wasn't me. I was... otherwise occupied, but I do keep an eye on them, but I didn't answer it. No.
Very good. Well, it's been answered, so that's all good. Listen, I think we're done for now. That's hopefully useful to the people who asked a question. And as I say, we're well over time. So if you're still here, fair play to you for hanging in. It's 178 people so long, Jeremy.
There is indeed. Yeah, no, thank you for sticking the thing. We've had it's an hour and 45 minutes. And all we can say to you now, guys, is you've earned it. And hopefully the sun will keep shining. Have a great bank holiday weekend. I know I'm planning on taking a few days off next week myself. I'm sure many are as well. And listen, we'll talk to you very, very soon. We'll see you over the summer. Hopefully for some of our webinars, we will be taking a little bit break. But if you're a regular Practice News attendee, be back with us on the 3rd of September, and it'll be great to see you then.
Absolutely. Look forward to that. I mean, as you can see, there's loads more to talk about, so that we're not running out of topics which are absolutely important for practitioners to know about. So I think people are generally signing off now. So thank you very much. Now, do we have the what do you call it? The survey in the chat. I wonder. I think
I did take it. I took a picture of it that it was 5842 as.
No, sorry, you're right. It was 5840. That's survey.
The survey. Oh, sorry.
I don't know if Chris had a chance to throw that in to the to the chat. It would be great if it was there. I think we said we might do that in our presentations in future, which is to put the survey actually into the chat so that people can answer it before the end. I don't know if it got in there. If it actually
I didn't see it. You know what we'll do is we will send it out afterwards in an email, and obviously we're delighted to get any feedback that you have. We love the good stuff, but we also like the bad stuff, because there's always points we can improve upon. So do share your opinions, and it'd be great to have the feedback. So that should be going out hopefully, and there will be a link going out with this as well to the recording. So if you missed any of it, didn't get in at the start, or had to go away at the end, you can actually get back and check out the recording to our YouTube channel, which should be available by early next week.
Yeah, that's it. They're usually very quick at getting these out. Listen, guys, I think we'll finish up there. Thank you very much to everyone. It's really appreciated. So, and Jeremy, to yourself for putting it all together, as always. So,
indeed.
Really
thank you,
and Chris. I think Chris is still here with us. So, thank you, Chris, for hanging in there. We're eating into your time there. Thank you very much. Take care now. Cheers.
Bye, guys.